There is a need to stand out in the job market as the financial industry becomes more competitive. The CFA program gives your career an edge. It is respected and sought after by top financial institutions. Salaries for CFA charter holders increase at a greater rate year over year than the general market. You can also stay up to date with the latest trends and knowledge in finance, such as AI and data analytics, with our regular updates, expert guides, and in-depth analysis. Completing the CFA program opens the door to a variety of careers in investment management and beyond. Current CFA charter holders include the CEO of a global asset manager, the founder of an executive coaching firm, and a space VC investor. In addition, you will join a unique global network of more than 190,000 financial professionals who have achieved the CFA charter. Ready to supercharge your career? Check out our other beginner's guide videos or visit the link on the screen.
Are you looking to kickstart your career in finance? Want to boost your knowledge of the investment industry? Look no further than the Investment Foundation Certificate. Designed for working professionals and university students alike, the Investment Foundation Certificate provides a comprehensive introduction to the investment industry, equipping you with the knowledge and skills you need to excel. Gain a fundamental understanding of the industry structure, job roles and terminology. Explore the types and functioning of markets, investment instruments and vehicles, and the basics of investment management, risk management, and performance evaluation. Discover how to effectively service clients' needs while upholding the highest standards of professionalism, and stay up to date on the latest industry trends. By completing the Investment Foundation Certificate, you'll work more confidently and effectively, distinguish yourself in the job market, and open doors to new opportunities. You'll also earn a digital badge and certificate that you can proudly share with your network. And the best part? You can learn at your own pace, whenever it's convenient for you. Our user-friendly digital platform ensures a seamless and flexible learning experience. So whether you're looking to enhance your skills in your current role or explore a career in finance, join the thousands worldwide who have already gained a competitive edge with the Investment Foundation Certificate.
Good afternoon, everyone. Welcome to the Basic Principles on Islamic Finance webinar. Thank you for being here today with us. My name is Monzen Malyari, Market Risk Modeling of Citibank Philippines, and I'm your host for today's online event. We would like to take this opportunity to recognize our annual corporate sponsors. Platinum sponsor is Security Bank Corporation, and silver sponsor, FTI Consulting Philippines Incorporated and BDO Unibank Incorporated. We would also like to recognize our organization partners, Bureau of the Treasury, Fund Managers Association of the Philippines, Securities and Exchange Commission, and Trust Officers Association of the Philippines. To formally welcome us all, may we please have the President and Chairman of CFA Society Philippines Incorporated, Dr. Robert Ramos, CFA, CAIA, CIPM, RFC.
Thank you very much, Monzen. Members of the CFA Society of the Philippines, our collaborators and panelists from the CFA Society of Pakistan, guests from the Securities and Exchange Commission, Bureau of Treasury, Central Bank of the Philippines, industry associations such as TOAP, MART, and FMAP. Thank you for gracing us with your presence in this webinar on the basic principles of Islamic finance. Islamic finance is very important from a global financial perspective. To quote ADB, Islamic finance is important for three main reasons. It meets the needs of additional financing for developing countries. It promotes financial inclusion since it offers alternative vehicles for saving, financing, and insurance to some segments of our population who are not inclined to use conventional financial channels. And it promotes financial stability. Given this, it is important to understand Islamic finance and its basic principles. Again, I would like to thank our partners, CFA Society of Pakistan, for collaborating with us to share the knowledge. Thank you very much. Back to you, Monzen.
Thank you, Dr. Robert Ramos, for the warm welcome. This webinar is brought to you by CFA Society Philippines in partnership with CFA Society Pakistan. A reminder that during the presentation and panel, you may leave your questions in the Zoom chat and our speakers may answer them during the event. Joining us today to discuss the basic principles of Islamic finance is one of the leading management educationists in the country. He is the Pro-Chancellor of Al-Razali University and has held key positions at LUMS, IBA, and KSBL. With over 30 years of experience in research, teaching, training, and consultation, he has delivered numerous successful training programs to top-tier organizations. He completed his PhD in finance from Mississippi State University, US, and is both a CFA and CPA. He has served on boards of eminent Islamic schools and various advisory committees, reflecting his passion for integrating traditional Islamic teachings with modern education. Without further ado, please welcome Dr. Zishan Ahmed.
Thank you very much, everybody, for joining this session. And since we have very limited time, I would just go straight to the presentation and I'll share my screen here. Okay, so the idea is that this is intended to be the very first conceptual unfolding of Islamic finance for somebody who is totally uninitiated in the field, and give him a commonsensical understanding of what Islamic finance at its heart, at its very core means. And I'd not take a lot of time because there's, I think, a very rich set of questions that have been included in the panel discussion. So I'll just go on to that snapshot, the conceptual framework, which will help you understand the basic rules of Islamic finance. And once you understand this framework, if you listen very carefully to what I have to deliver in the next 10 minutes, I believe that all your confusions can be sorted out if you understand the basic concept that I'm trying to present in the next slide. And it's mostly intended for Islamic banking and finance, but then the questions that we're going to address later on also address specifically the capital markets do's and don'ts from the perspective of Islamic finance. So here we are. Whenever we talk about investment or we talk about financing, there has to be some kind of assets that have to be involved. Either we invest in financial assets or other types of assets for investment return, or we do our financing through some kind of contracts or some kind of arrangements or some kind of agreements, some kind of capital market instruments, or some kind of what you call assets again. So when you're talking about assets in Islam, we can classify the Islamic jurists, the Islamic scholars classify assets for Islamic economics into two main categories. Either they can be monetary assets, which means all the currencies, all the means of mechanisms of payment, like, traditionally in the medieval times or before that, it has been traditionally gold coins, which used to be called dinars, and silver coins, which used to be called dirhams. And more recently, we have paper money. So all the currencies of Philippines, Pakistan, India, wherever, these are considered to be monetary assets. That's one possibility, that we can invest in monetary assets. The other thing is we are holding our assets in monetary assets. The other possibility is that we are holding or investing our investments, our savings, into real assets. Now, what could be an example of real asset? If you pick up any standard textbook, Briley Myers or any other textbook, they differentiate between real assets and financial assets as real assets as those assets that have intrinsic financial utility, intrinsic utility for the human being. So if you ask a 10-year-old, what is this thing good for? For example, we're all looking at either our cell phones or our laptops. This is a real asset. And a 10-year-old would tell you that this is like, I communicate with people, I watch presentations on it, I do so many things with it. So we can look at the air conditioner, which is maintaining the temperature of our room. That's also a real asset. As opposed to real assets, monetary assets do not have intrinsic utility. They do have value. I mean, we can buy so many real assets by paying off with the monetary assets like rupee or whatever currency is. But then money itself, $100 note, does not have intrinsic utility. It cannot quench our thirst. It cannot feed us. It cannot serve as a communication mechanism, not in its form of a piece of paper. But once we convert it into a real asset, like like a furniture, like an equipment, like a plant, like a machinery, like a cell phone, whatever, it then has a specific utility for us. So this is the fundamental distinction that you have to understand in Islamic economics. The other distinction is, once we talk about real assets are also of two types. One possibility is that they are consumable. Consumable means that real asset is such that whenever we want to derive utility out of it, we consume it, we use it up, it is no longer. So for example, the example would be typically any food items, any edible items, or any fuel that we consume in our vehicles, in our generators, or other such things. So these things are real assets because they're fulfilling some needs of the humans directly, but yet they're consumable. They're not non-consumable in the sense that whenever we want to derive utility from them, whenever we put them to a use, they are gone. To the extent that we take help from them, take utility from them, they are consumed. The other possibility is non-consumable real assets. So here we have examples of equipment, plant, property, furniture, all those things that we can derive utility from. For example, if I'm using, imagine me drinking few sips from a glass of water. By the time my thirst is entirely quenched and I've finished the water from the glass, there are two assets that I'm benefiting from. One is the water in it, which I've consumed, and to the extent I've consumed, it has quenched my thirst. But the real asset, the real non-consumable asset, which is the glass, still remains there. So when we take examples of any property, any vehicle, any equipment, we usually referring to non-consumable real assets. Now, what Islam has to say is basically, now don't confuse it, please, with the depreciable assets or not depreciable assets. We are not even talking about depreciation. We are entirely building our concept on whether the asset would remain there if we use it. If it does, then it's a non-consumable one. If it loses its existence, then it's a consumable one. So what Islam says, and the examples could be, again, the clothes that we wear, that's a non-consumable asset. The building, the bed on, the furniture that we sit on or lie on, all those are examples of non-consumable assets. So what Islam says is that basically the principle of usury or interest in Islam is basically that if we are talking about monetary assets like paper money, gold, silver, which is generally used as mechanism of payment, or real consumable assets like fuel or edibles, if you lend it to somebody, if you invest in that, and you charge a predetermined return, whether it's fixed or whether it is benchmarked to another variable return, this is what Islam prohibits. This is what Islam calls interest or usury, and Islam does not let you deal in it. So all Muslims, this is one of my friends who was working for Standard Chartered Bank at that time, who's heading the Islamic banking function in Pakistan. So his boss, was a regional head of Standard Chartered. He came and he asked how big a sin is usury in Islam, and he said it may be among the top five sins. Thou shalt not charge usury from your brother from others. So that is like, for Muslims, it is a fundamental thing that they cannot, if they're lending somebody any monetary asset or any consumable asset, they either are doing an act of charity. You can keep this for so many years and so many months, and then we would have reward in the hereafter, and then you can return it to us. And similarly, they can do the same thing with the consumables, but they cannot charge any rental or any predetermined return on that, right? So that's where Islam prohibits. That's what Islam calls riba or usury. Now, the other possibility is that we have real assets which are non-consumable in nature, like all the things that I've mentioned before. And when you invest in those assets, you are, from Islamic perspective, you are allowed to give it to somebody, lend it to somebody, rent it to somebody, lease it out to somebody, and charge a fixed predetermined return or a benchmark-based variable return, which is again predetermined in the sense that this is like 100 basis points above that benchmark or this benchmark, right? And this is perfectly Islamic. So once you convert your asset into a real asset, a non-consumable real asset, you can charge whatever you like, whatever is agreed upon with the person whom you're financing. So this is the basic principle. Now, if you look at the core rationality behind this thing, you would find that if you look at the green balloon, I call it the green balloon, the halal balloon, or the permissible balloon, it's basically, you see that you can basically separate the two things, the corpus and the usufruct. So corpus, which is called ayn in Arabic, is something different, and you can separate it from, for example, if I, from Mr. Robert, I take his, let's say, very cutting edge laptop from him for using for a few days. And he says that Zishan, I'm going to charge you $1,000 for using this extraordinary laptop for the next 1 week. Okay, and we agree on that. So it is possible that for this 1 week, Robert still retains the legal ownership of this laptop, this high-tech laptop. But Zishan, by virtue of giving Robert the rentals, he has acquired the right to use. He has legally earned the ownership of usufruct for this 1 week. And these things can be separated. But if you look at some consumable asset, like maybe some commodity, if it is like, a bag of flour or maybe a ton of wheat flour, then it's not possible to split these things into two. So the corpus and usufruct is one thing. So if I'm going to take 1 ton of rice or wheat from him and I'm going to use it to feed my clients, then that corpus would be gone, would not be there anymore. So here the Islam says that, so the options, the alternatives in Islam, so what Islam says, the basic thing that Islam says or prohibits is that you cannot charge a predetermined return on the red balloon, on the right side that you can see. Now, we have alternatives for everything in Islam. So for example, if we look at the possibilities that we have of financing and investing on the green balloon side, we have lease-based financing. For example, we have offered for typically Islamic Bank in its, for example, lease-based finance, what it would do is buy a car, buy an asset, buy a machine, buy a plant, and then rent it out to the client who is going to use it, who is going to pay a rental on this. Similarly, what Islamic banks do is for house financing, for example, in case of a mortgage, we see that conventional banks, basically they lend out red balloon money or monetary asset to the client, and the house is held as a mortgage or collateral. But Islamic banks go one step ahead. They actually buy the house in the partnership, in the co-ownership with the client. For example, a client might pay 30% of the payment for the house, and the bank might pay 70% of the payment. So 70% of the house is actually owned by the bank. So it becomes a green balloon asset, a non-consumer real asset on which the bank can charge a rental. And that rental can again be a fixed amount or can be pegged to a benchmark, 200 basis points, 300 basis points above whatever. LIBOR in Pakistan, it is Karachi Interbank Offer Rate, KIBOR, whatever. So that's also called diminishing musharaka, and we'll look at it in a little bit more detail. Similarly, Islam does not say that you cannot do financing on the green balloon. You can still do the financing on the green balloon, but it cannot be something that is predetermined. So you have two choices, two types of funding or financing methods or investing methods that you can use. Either when you're investing in a venture where there's a proper P&L, an income statement, you can invest that money in that venture and you can become a profit and loss sharing partner. And Islam has specific rules that these are the rules for profit sharing, these are the rules for loss sharing. Basically, the rules say that you can agree on a profit sharing ratio as whatever you deem fit between the two parties, but losses have to be shared in the ratio of capital contribution. So these are called musharaka, mudarba, and other such options which are participatory in nature. And similarly, what you can do, the other thing that you can do is engage in, if you're, let's say, have the capital in the form of monetary assets or consumer assets, then you can engage in a trade-based financing, which is basically selling and buying. So there, maybe in the next slide, I can show you that as I've laid out in the previous slide, the lease-based financing can be ijara, or Islamic leasing, or diminishing musharaka, the house financing, typically in Islamic finance. The participatory financing could be musharaka and mudarba. The difference between the two is basically if all the partners are investing, then it is musharaka. But if one of the partners, at least one of the partners, one or more of the partners are not investing any money, but they're still, they have share in the profits by virtue of giving their management inputs, then it becomes a mudarba. So these are profit and loss sharing agreements or arrangements, and you can engage in them even if the balloon is red. And then the option could be trade-based financing, which is murabaha, istisna, salam and istisna are basically Islamic forward sales, and they have specific conditions to fulfill. Not all forward sales are allowed in Islam, so they have specific conditions, which obviously we can discuss in a later session. And murabaha is basically cost plus pricing, which is where we it's also a credit-based instrument where we charge a specific margin for selling something where the price is deferred. It's a kind of a credit sale, and we get the money later. One last thing that I would like to address here before we open up for questions is the basic practices of Islamic finance anywhere in the world, banking and capital markets. The first thing, the raison d'etre of Islamic finance is basically Shariah, the Islamic law. Obviously, anything that has Islamic label in it has to be approved by the experts in Sharia. These are very qualified people who do not just know their own domain very well, Islamic jurisprudence and Islamic laws, but they have a very good and sharp understanding of capital markets and banking and all those things. The other thing is local regulation. So there are certain practices that have emerged in Malaysia, certain practices in Pakistan, certain other practices in the US, and certain other practices in Saudi Arabia. It has to do a lot with the local regulation of the central bank, local regulation of the local capital market regulator, SEC, whatever. Similarly, customer behaviors. We have our cultural context, the local consumers, how risk averse they are, which is their mode of preference, whether they like fixed return modes or variable modes. That has also shaped what instruments are going to be popular in a particular economy. And similarly, competition. So whatever the competition is doing, for example, if there is a strong presence of a conventional counterpart in Islamic banking, in banking, then Islamic banking practices would have to be shaped by that competition as well. And these are certain things that I thought I would address. One thing that I've left for the question and answers is basically one thing that I'd address, and going back on this slide again, is that when we talk about capital markets and money markets and the financial markets in general, the basic principle that we gather from this snapshot, this basic concept is that whenever we're talking about securitization, it's a paper or it's a transaction. Basically, we are talking about what we have to look at is what is the underlying pool of assets. So if underlying pool of assets behind that paper, that securitization is real non-consumable asset, we can have a fixed return, a predetermined return, benchmark-based return, and that's not a problem. But if we are offering what we are offering beneath the thin layer of that security, the real assets, the things that we have, the assets that we have are monetary assets or consumable assets. In that case, we cannot Islamically charge or contract a predetermined return. And what we can do is we can make it into a equity security like a musharaka sukuk or mudarba sukuk, or we can make it into a trade-based security like a muraba sukuk, but it has specific rules that it has to fulfill. Now, when we talk about the CFA community, mostly we are dealing in, and big chunk of what we deal in is equity securities. So they will be like musharaka securities. And then the basic question that would come up, but I'll just address a few things as basic principle. So when we talk about the Islamic universe of the assets in which we can invest, obviously they have to be, number one, the business of the company whose share we are seeking have to be Sharia compliant. So we cannot be, because Islam prohibits, for example, trading in alcohol or consumption of alcohol. So if the company is Murray Brewery, which is like deals in majority of the products are in that category of alcohol-based products. So the first criteria, the first screen would be that has to be Sharia compliant. The business has to be Sharia compliant. Again, if it is a conventional financial institution, so that is the first criteria, the first test that the company would fail. But if it is the business is halal or permissible from Islamic perspective, then the other criteria kick in. Then there are certain criteria that Dow Jones Industrial Market Index follows. There's certain criteria that Pakistan follows. There's certain criteria that other places follow. So FTE Islamic Index follows. So those criteria are usually based on what percentage of assets are in halal assets. Like, for example, they sometimes come up with 33%, and in Islam 33% has a specific significance. If it is higher than 33%, then is considered to be sometimes impermissible. Similarly, there are certain constraints on the percentage of income that is coming from non-compliant sources. So that is in Pakistan, for example, 5%. So that's a tolerable limits. But these are limits which the scholars want to squeeze a little bit further. They want to tighten it as we move on, as we have a bigger universe that comply to Islamic principles, holistically comply to Islamic principles. Similarly, there are certain constraints on leverage. So if a company that is highly leveraged, like 60%, 50% leveraged, most Islamic screening criteria do not allow that. So this is a very brief overview of the screening criteria that Islamic fund managers use to find out which investment is kosher or halal or permissible for them. I think this is where I would like to stop, and I'd like to, open up for the panel and the questions.
Thank you very much, Dr. Ahmed, for an insightful and accessible introduction to Islamic finance. As you mentioned, we will now proceed to the panel discussion with Dr. Ahmed with us as well. I would like to introduce our two additional panelists and our moderator. Our first panelist brings nearly 30 years of experience in financial consulting, research, training, and teaching. She has worked as an Islamic banking consultant for the ICD, a corporate banker for Mizan Bank, and a research analyst for Global Securities. She has taught at leading business schools in Pakistan and conducted training for finance professionals in collaboration with USAID, SECP, and SBP. She co-authored case studies in Islamic finance and Sharia compliance and compiled an Islamic finance booklet for the CFA Institute. Currently based in South Africa, she is a subject matter expert at IFT. She holds an MBA from IBA Karachi and is a certified ethics trainer by the CFA Institute. Without further ado, please welcome Ms. Shazia Farouk, CFA.
Thank you. Thank you, Mazen, for the introduction.
Let me introduce our second panelist as well. He is the former CEO of Al Mizan Investment Management Limited, managing the largest Sharia compliant portfolio in Pakistan. With over 30 years of investment management experience, he completed his MBA from IBA Karachi and received a CFA charter in 1999. He is the founder and first president of CFA Society Pakistan and has received multiple awards from the CFA Institute, including Most Influential CFA Charter Holder and Volunteer of the Year Lifetime Achievement Award. He has served on numerous CFA Institute committees and boards and has focused on managing Sharia-compliant portfolios for the last 17 years. He is a renowned speaker and panelist at global conferences on Islamic asset management. Without further ado, please welcome Mr. Muhammad Shaib, CFA.
Thank you very much.
Thank you. And to moderate the session, we are pleased to have today a partner in SGV Strategy and Transactions Practice and the local competency leader in Strategy and Infrastructure Advisory. With over 20 years of experience, she specializes in strategy, valuations, business modeling, due diligence, and audit. She leads SGV's government and public sector and economics advisory team and has spearheaded significant projects in digital transformation, growth strategy, and infrastructure advisory. She has worked on various PPP projects in the Philippines and has extensive experience in financial consulting across multiple sectors, including consumer products, retail, infrastructure, real estate, and healthcare. She holds a CFA charter, is a chartered valuer and appraiser, and has completed an executive development program at Kellogg Business School. She graduated with honors in applied economics and accountancy from De La Salle University and is a certified public accountant. Please join me in welcoming our moderator, Ms. Marie Stephanie Tan Hamed, CFA.
Good evening, everyone. All right, thank you so much. Thank you, Dr. Zijan, for the very brief introduction to the basic principles of Islamic finance. And maybe I can direct the first question to you. Given our the economy in the Philippines, where our government is pushing hard on financial inclusivity, how do you think, or how can Islamic finance help improve our financial inclusivity in the country, particularly in our Muslim Mindanao region? I do understand that you may not be totally familiar with our regional economics, but maybe in a broad sense, how can Islamic finance help improve financial inclusivity?
Can I answer that?
Yes, Dr. Dr. Zijan.
So basically, there was a while ago I saw a PhD thesis which talked about the reasons for a lack of inclusivity in finance in most Muslim countries. It turned out that most of them would view it as prohibited, taboo, mostly. And when Islamic finance, Islamic banking, Islamic capital instruments, they enter the market, they encourage those people who are conservativist Muslims to come forward and invest in those. And I believe in Philippines, for example, there is a significant community of Muslims who are otherwise shying away from capital markets and banking system. If they know that they can do a better job in managing their personal finances, their business finances, with the help of financial institutions, financial markets, and they have the backing of some of the credible scholars, Islamic scholars, they would be forthcoming with investing and financing from the Islamic financial system, Islamic financial instruments. So that would, to a great extent, enhance the inclusivity within Philippines, inshallah.
I see. So you've mentioned about some regulatory as well as a conventional traditional banking as well. Maybe if I can ask Shariah, or how can then Islamic finance compete or complement the traditional banking or traditional finance?
That's an interesting question, Stephanie. Islamic banks offer a full suite of products just like conventional banks. As Dr. Zishan has mentioned, he's given a brief intro of a few products. So we have short-term financing products, which are structured on the basis of Murabaha, Salam, and Istisna, which take care of basically working capital needs of the customers. Then we have medium to long-term products structured, under the Ijara, which is the lease-based mode of finance, Sharia-compliant lease-based mode of finance. Or we have another product called diminishing musharka for medium to long-term financing. On the liability side also, Islamic banks offer all types of deposit products under the participatory modes of finance, as explained by Dr. Zishan. These modes are Mudarba and Musharka. Other than that, Islamic banks can offer unfunded facilities such as LCs and other such facilities under the agency mode. So basically, if a customer is banking with an Islamic financial institution, he is not deprived of any product. He will get the same services, the same offering, but in a Sharia compliant manner.
Oh, okay. There's quite a number of products that you mentioned. It's quite interesting for me as a naive, a beginner in this Islamic finance. It's very interesting to note that there are these products that can be offered. It's quite also similar to what the other traditional banks do offer. But moving beyond those type of products as well, maybe Muhammad, if you can also share if there are what are these Islamic mutual funds, if there are, and how do they also differ from traditional mutual funds?
Okay, thank you very much for the question. So in terms of Islamic investment products, one of the basic product or concept which is available for Islamic investors is mutual funds. And so roughly about 4 decades ago, a lot of research was done by Sharia scholars to identify how people can invest in an Islamic manner. And from that perspective, as Dr. Zishan basically alluded to a little bit of it earlier, that when you are investing in a business through a mutual fund, so first of all, obviously, everybody, I assume that everybody here knows what the mutual fund is. A pool of assets where collectively you pool the money and the fund manager is assigned the responsibility to manage the money efficiently to achieve the investment objectives of the clients. So that's the basic structure. So now, how does a mutual fund, Islamic mutual fund, invest? So when we are talking about a normal or traditional fund, the filter is basically the fundamental analysis. So when a normal fund invests, they basically decide whether the value of the security or the value of the share they're buying is the stock undervalued or overvalued. So that's a fundamental analysis. But in addition to this filter of fundamental analysis, there's a Sharia filter also applied in case of Islamic funds. And that is what is the basic business of the company. If the business of the company is permissible by Sharia, and Dr. Zishan mentioned, that there are sources of Islamic regulation, which is Sharia. The source of Islamic laws is Sharia. So if the Sharia allows investment in those assets in which that company is dealing with, then a mutual fund can invest in those assets. Now, there's different examples. For example, interest-based financial institutions, Islamic mutual fund would not invest in gambling, alcohol-based products, to some extent, tobacco as well. So it is very close to what the Western world knows as ESG or ethical investing. So more or less, it's very close to the ethical investing. The Islamic investing is similar to ethical investing. Now, besides this concept of whether the business is halal or not, certainly some part of the business of the company in which you invest in might be conducted in a manner which may not comply with the Sharia regulations or Sharia requirements. And that is what we call the financial screening. So the first screening was a business screening for Sharia compliance, and the second screening is a financial screening. Now, in terms of financial screening, because we are operating in a world which is predominantly the predominant players are the traditional financial institutions. So when a company which is selected for investment in a mutual fund, if it is got some surplus liquidity, it may be placing that surplus liquidity in some financial assets. Now, those financial assets may or may not be Sharia compliant. So if it is and if it is not Sharia compliant, it may means that they're earning some interest income. So that interest income is certainly not permissible in the Sharia compliant mutual fund. So the concept of purification arises. So for example, if the revenue, if a mutual fund invests in a company where 5% or less than of its revenue is coming from non-permissible activities or from interest-based income, then still a fund manager can invest in those companies. However, at the end of the year or throughout the year, 5% of the dividend income is actually set aside as charity, and it is not made part of the return of the fund. It is not disclosed as part of the return of the fund, and also it is not given out to the unit holders, rather than based on the directives or the guidance provided by the Sharia scholar or the Sharia board of the fund. That money is set aside as charity and given to for social welfare. Now, in terms of borrowing, if a company that is to select for investment in a mutual fund is borrowing from a conventional or traditional financial institution, it may be paying some interest on that. Now, there's a threshold level that is in most cases 33%, that not more than 33% of its borrowing should be coming from conventional sources. And also, basically, they might be so in terms of these are the different ratios which are used. One of the important criteria as far as Islamic investment is concerned is related to what the Dr. Zishan mentioned about the financial assets which are consumable, right? So, and he mentioned that if the capital itself is not considered a factor of production in case of Islamic principles. So either you have to, if you cannot just lend the money and based on that you can earn more money. That's not permissible. So from that perspective, if the mutual fund is buying a security, the price of which is less than the value of the liquid assets of that company, then it again is not possible, because then it will be basically buying a financial asset for a price for consideration which is just financial consideration for financial asset and not for the real assets. So these are the different parameters which are used to kind of decide what kind of investments can be made in the mutual funds. And as I said, over the last 20 or 30 years, there has been tremendous progress in terms of the Sharia compliance of the mutual funds. And we have different indices, we have different screening criteria based on different markets. There's a Dow Jones Islamic Index criteria. There's a FTSE Islamic criteria. In Pakistan, we have our own homegrown KSE Mizan Index criteria. So these criteria differ from each other in slightly different ways based on the local situation of the capital markets. But the good thing with what we have seen empirically over the last 20 years is that the performance of the Islamic mutual funds has been better than the performance of their traditional mutual fund which are investing in conventional assets. So when the Islamic fund started in Pakistan about 20 years ago, one of the, I would say, the concern or criticism was that if you want to invest in an Islamic manner, you have to sacrifice some part of the return. But alhamdulillah, we have seen in the last 20 years that empirically it has been proved that the return on the Islamic products has been higher than the conventional products. Thank you.
Thank you, Dr. Muhammad. Let me just ask a couple of follow-up questions, and I'll go to our chat because there's a list of questions already in our chat group. So first, just a clarification. You mentioned about 5%, 33%. Are these flexible, or are these like sunnah that that is universal globally, or this is like can be set by the local Sharia board or scholars?
Yeah, okay, that's a very good question. So typically when you are doing any Islamic institution, you're setting up any Islamic institution, whether it's an Islamic bank or Islamic mutual fund or an Islamic insurance company, which is called Takaful, you need to appoint a Sharia board or a Sharia scholar to guide you in terms of how you have to conduct your business, and to ensure that all the business operations of the company, including all the contracts, all the are in accordance with the principles of Sharia. So these percentages have their some background as well. For example, one of the sayings of the Holy Prophet is that if it is less than 1/3, it is okay. If it is something is one, it's called minority. So that is the reason that sometimes 33% is used. As far as the 5% for the interest-based income or non-compliant income is concerned, that is a threshold to ensure the safety of the return of the unit holders. So for example, if I invest in a company where 30% or 40% of the income of the company is coming from non-Sharia compliant assets or investments, then basically it means that obviously the investors will be deprived of that 30 or 40% of the return. So these are the tolerance levels, one can say, or threshold levels. And over the years, these tolerance levels are being tightened because now, as we see in Pakistan or in Malaysia, in similar markets, more Islamic countries, there's more availability of instruments for Sharia compliant investments. So I would say that in an economy where the Islamic institutions are very small in size, typically there's more tolerance for these ratios. But as the economy is merging more into Islamic side, those ratios are tightened.
So for those assets that these mutual, yes, Dr.
Can I add
Shariah?
something over here? Yeah,
Sure.
I just wanted to add one thing over here, that we have like global standard setting bodies like AOP and IFSB, which are also setting standards for the global Islamic finance industry in terms of reporting, in terms of accounting and auditing. So as to have a standardization across the globe. So they also, contribute in terms of the standards that are being followed by Islamic financial institutions.
Thank you for that additional information. Just to close off these investable assets for Islamic funds, how about distressed assets or distressed debts, for example? Is that considered compliant as an investable asset? And how can the unit holders also earn a decent return?
Yeah, so that's a very good question. So basically, as we discussed earlier, Dr. Zishan mentioned that when you're talking about financial monetary assets, then certainly it is in its direct form. You cannot just buy the direct asset. But if you are talking about a private equity transaction where the assets are purchased and not the monetary asset, is the monetary, it's not just the monetary asset, but the actual assets are purchased, then obviously there is a possibility that distressed asset can also be acquired, and you can revive the company and then you can kind of sell it off.
Yeah. All right. Thank you for that. Dr. Shariah, just to follow through with what you mentioned about global reporting standards, maybe you can help us understand as well that for example, for a specific transaction, this is a question from Ms. Maria Favilla. For it to be called a Sharia compliant, like how many scholars are needed to validate and give what kind of certification and what line of specialty should they possess in order for them to certify that this is a compliant transaction?
Okay, first we need to understand, before I answer this question, it's a very relevant question. Before I answer this question, I would first like to just shed some light on the Sharia governance framework of Islamic financial institutions. So Islamic financial institutions are typically governed by a Sharia board, an in-house Sharia scholar. And in larger institutions, we have dedicated Sharia compliance departments which oversee Sharia compliance of transactions on a day-to-day basis. So the Sharia, there's no set number of Sharia scholars who have to certify that a transaction is Sharia compliant or not. even one Sharia scholar would do. So as long as the basic Sharia principles are followed and adhered to, and it is aligned with the Sharia rulings, then even certification by one Sharia scholar is enough. And in some developed markets, we also have Sharia boards at the central bank level as well, who oversee the Sharia compliance of Islamic financial institutions.
All right. Thank you for that, Dr. Shajia, for clarifying. This one, question from Jaime Avila, anyone can answer. Can Sukuk have convertibility feature, such as convertible to shares in the issuing company?
Okay, this question is for me?
Yeah, for you or Dr. Zijan or Muhammad.
Okay.
Whoever.
So mostly, the sukuk that we have seen are ijara sukuk, which are lease-based sukuk because they are, in terms of a functionality, they are easier to, execute, and in terms of tradability, they are also easier to trade. So we haven't, in my knowledge, maybe Dr. Zishan would like to add, or Shrebsa would like to add, I haven't seen a convertible sukuk so far. And there are other modes on which, like, sukuk can be structured on different modes of Islamic finance, as mentioned by Dr. Zishan. We can have a sukuk structured on the ijara mode, or a musharka mode, or a mudarba mode, but the most popular sukuk is ijara sukuk, which is lease-based sukuk. So we have like this kind of issuance from the regulator side as well, and from the corporate side. So if any of the other panelists would like to add into it.
Just one thing that I'd like to mention, that from a Sharia point of view, there is a possibility that you can have options within a transaction. So it's a possibility, but I'm not aware of the current specific instruments which do offer a convertible option. Whether Shoaib would be able to, I think, enlighten us on that.
So there could be very limited examples of that, but from strictly from a Sharia perspective, I don't think there's any prohibition for having a conversion feature in a sukuk. And this would typically go very closely to the musharaka-based sukuk, where the spirit of the transaction is to have a profit and loss sharing. So that can be easily converted into a equity or the shares.
All right. There's another question surrounding sukuk, and quite specific. So let me just read through it. Say this is from Alan Robert. Say we wish to issue a sukuk. Do we have to define specifically the loan project where the proceeds of the sukuk would be channeled to? Maybe, I guess, the use of proceeds.
Okay, I think this would fall under the liability, on the liability side, where we can have a restricted pool of funds and an unrestricted pool of funds. In the restricted pool of funds, we take money from the depositors for investment in a particular project. And for unrestricted pool of funds, the Islamic financial institution is allowed to invest in any type of assets that it deems appropriate.
Okay. Any additional?
Yeah. Typically, most of the transactions that we have seen in Pakistan, at least, is for the ijara-based sukuk. And those ijara-based sukuk, which are sold as a security itself. So basically, the SPV structure is used. So the asset is placed in an SPV by the or the entity, and the SPV owns the asset, and the unit holders are called sukuk holders, who are holding a share in those assets, and they are paying a rental on that. So the sukuk company actually pays a rental to the unit holders based on. So in such cases, the asset is actually identified, right? So it's typically the question of whether it's a new asset which is being acquired or existing asset being financed through a sukuk structure. In both cases, the underlying asset is identified. So your question is about that, do we have a define specifically the project where the proceeds of the sukuk would be channeled? Yes, in those situations, the answer would be yes.
Mm. Okay. Thank you. Thank you for that. I'm just
But
going.
just to,
Yes.
sorry, can I just add in just for
Sure.
general borrowing, because I think the second part of the question says that designs a lending program for borrowers where the borrowers do not have the appetite, but at some point in time they would want to borrow. So I think that would come under the liability structure, the Sharia compliant liability structure, where the funds are channeled through the participatory mode, and they can be channeled using the restricted on a restricted basis where it is for a specific project, or an unrestricted basis where you can invest in any project.
All right. Maybe on that as well, a specific question. You mentioned about rentals and leases, and Dr. Shishan mentioned it in one of his examples as well. If one is using a mortgage finance and paying rental amount on a monthly basis, how is the principal amount deduction work? Maybe if you can walk through us the different steps, and then maybe the sort of the repayment of the principal loan.
Okay, so basically, the mortgage products are structured according to the diminishing musharaka mode, which is a combination of a rent-based contract and a participatory contract. So a bank purchases a house in partnership with the customer. So the number of units owned by the bank are predefined, and the number of units owned by the borrower are also known. So there are two contracts going on in parallel. One is for the rent, which is for the usage of the bank-owned units in the house, and the other is for the purchase of these units from time to time. So these are two separate contracts which will run in parallel under this mode.
All right. Thank you for that clarification. And then we have another question for Dr. Zijan. Is short-term 3 or 6 months ijara sukuk possible? And why there are no alternative to T-bills in Pakistani market? And why is that government is using different modes for issuing short-term treasury sukuk? Sorry, Dr. Zijan, you're on mute.
Yeah, so usually all these instruments, they lend themselves to more longer term contracts and arrangements. But there's a possibility that we can have something on rental, like if we rent something even for 3 months or 1 month. So there's a possibility, but then there are not many assets that can be, because then sometimes it involves sales and lease back. And when that is involved, usually Islamic scholars become a little careful in having a very short-term contract, sales and lease back, because one thing that is prohibited in Islam is repurchase, which is like bay'ina, which is like earning on something which we just sold and then we bought back. It's like a repurchase agreement. So that's why it has been a little difficult to negotiate. But then there are other such arrangements where we're talking about commodity murabaha or such arrangements, where they usually use some kind of metal or some other things. So it's a little more prevalent in Middle East than in Pakistan, where they do the short-term financing thing. Others can also, Ms. Shazia or Shoaib can also contribute.
I think you've covered it well.
Yes, I think so. So mostly ijara sukuk are for a longer term nature.
Are Islamic banks allowed to finance coal projects? Very specific one.
Coal projects. So I don't think there is any restriction in terms of although yes, from an environment point of view, and it has issues, but I mean it is not amongst the prohibited list of industries where Islamic financial institutions are not allowed to invest. Maybe Dr. Zishan can add in.
Yeah, so in Islam, there are certain things which are, outright red line. So that is totally prohibited. So no Sharia advisor can give an opinion contrary to that. There are certain things which are disliked. It's called makruh. So it may fall in that category when we know that it is hurting the environment or something like that. But right now they haven't, because some of the things, if we look at, they exclude funding, investing in the stocks of those firms which produce ammunition, for example, because those ammunition are usually used in for damaging purposes. Similarly, hotel business sometimes is prohibited in some cases, because again, so sometimes they even come up with the criteria based on something that has been disliked in Islam. But I haven't yet seen something that explicitly prohibits gold.
Yes.
Right. Maybe let me just shift it a bit and look at it from an institutional framework, particularly in markets like Philippines, like ours, where Islamic finance is quite nascent. So what elements, other than policy-wise, should be in place to push for sort of mainstreaming Islamic finance? And together with that, what role does regulators play or should play, and how they can also be effective in pushing for a successful Islamic finance in markets such as ours?
Obviously, one thing that I'd like to say is, like, I think some of your areas have won some independence in terms of being Islamic, self-controlled and self-governed areas in Philippines. So I would say that because they would like to have because I had another separate invitation earlier from that area, where they were asking that we need to understand Islamic education, Islamic finance. So they were inviting me. I could not go at that time, but I could see that they're looking for options, not just in Islamic finance, but also in some. So if you're talking about having their rules and regulations and laws that are representing their own local values, I think that's a big opportunity right there. That's one thing. The other thing I would say is that when the whole world was struck by the 2007-2008 crisis, at that time, people were very actively looking into what Islamic finance has to offer. So I did a short paper on had this the same thing, the house financing in the US and other places would have been done through Islamic diminishing musharaka and other such things, like, rather than having AIG doing the conventional insurance and the CDOs and CMOs, we would have had Islamic instrument. Would it have been better? So the answer was that there were multiple circuit breakers if we would have gone the Islamic route. So I think that is something that, and after that, I saw an article that appeared in L'Osservatore de Romano magazine, which is issued by Vatican, and it had a statement from the Catholic Pope that we need to learn things from the ethical practice of Islamic finance. So that was very encouraging for the whole Islamic finance community. So I think we have to look at it from a religious angle, but we also have to look at it from a holistic angle. Does it offer solutions to the past crises and the challenges and the problems that we faced? So does it really offer something that we can use to avert the future crises, inshallah?
Thank you. Muhammad or Shazia, if you would like to add.
Yeah, I think first and foremost, an awareness for Islamic finance has to be created amongst all stakeholders, including the regulators, the providers of finance, and the customers. Plus, capacity building needs to take place at all levels. Then I think there should be a review of the existing regulatory framework, and in this context, international experts can be involved from markets which have been successful in this area, to bring the existing framework in line with best practices defined by the global standard setting bodies, as mentioned earlier. Plus, I think another thing which is very important for the development of Islamic finance in a nascent market like Philippines is the development of capital market products, and maybe Dr. Shoaib Saab can add something to that. Plus liquidity management instruments like Sukuk, so that Islamic finance can develop in a more sustainable and a more competitive manner.
Thank you. Mohammed?
Yeah, I think as just to continue from where Shazia left, so basically, I'll give you the example of Pakistan, predominantly a Muslim country with about 94% Muslim population, but Islamic finance had not been so popular or so prevalent about 20 years ago, which would be surprising to every one of us here. And the reason was that from a complete ecosystem perspective, neither the regulators nor the investors or the financial institutions were really focused on that. So awareness is certainly very important. And awareness, when you talk about awareness, the awareness of the investing public is important. At the same time, awareness of the regulators is also very important. So talking about the Mizan success story in the last 20 years, what we have realized is that we had to work on different fronts. One was to educate the investors, but at the same time, we had to educate the corporates as well, who are the issuers. You have to sort of educate them as well, and then the regulations, because in some of the structures which are used in the Islamic finance, like we talk about sukuk and we talked about special purpose vehicle, actually the cost of the transaction may go up substantially if your existing regulations in the country are not conducive to the promotion of Islamic finance. So we have to work on all the fronts, and we have another example of UK, where again the population obviously is a Muslim population is a minority, very small minority, but it has become a global center for Islamic finance because the focus was coming from the government. The government wanted to diversify and promote Islamic finance. So these are different models. I think one of the very important challenges which we have faced in Pakistan has been the availability of assets. So while the investors, a large number of investors were very keen to be participants in Islamic finance and Islamic investment and Islamic banks because of their religious or faith reasons, but convincing the corporates or the issuers to issue Islamic-based securities or Sharia-compliant-based security had been a big challenge for us. So because the demand has always been higher than the supply of those instruments, and that created a shortage of those instruments, and that kind of had a bottleneck in the system. But from a market like Philippines, I think the more relevant model is the UK model, where the institutions like the CFA Society Philippines and the regulators can work collectively to the conducive environment for the Islamic financial institutions.
All right. There's really much work to do on all fronts: the regulators, the public, the private sector, and the plain consumers, citizens as well. So there are two there's two themes that are quite popular or in the minds of all corporates and even the government across different sectors. And these are the developments in technology, as well as the focus being given on ESG. So how has Islamic finance been impacted by fintech, digital currencies, AI, and as part of the broader ESG trend as well? Does Islamic finance offer specific advantages or challenges in addressing the desires of the investors for, let's say, social equity or responsibility? So technology development and ESG. Anyone can take the questions.
So Islamic finance, because as mentioned by Dr. Zishan, when he was explaining the basic ideology behind Islamic finance is ethical, is environmentally and socially responsible form of finance, because Sharia doesn't allow Islamic financial institutions to invest in certain activities which are risky, for example, gambling, speculation, short selling, sale of debt and receivables. Also, industries which can have negative consequences, social consequences, such as ammunition, alcohol, pornography. They are not allowed, by Sharia. So, so that in addition to that, the asset-backed nature of most of the products is such that economic activity is linked to financing. So there is creation of real assets, which is good from the social perspective because it leads to job creation and growth of the economy. And in terms of on the green economy, the development of the green economy, so there have been green sukuk issuances. In fact, sustainability sukuk, which is takes care of the green economy and the social side as well, and ties in beautifully with the sustainable development goals, has been on the rise. So from a volume growth perspective, sustainable sukuk was $500 billion in 2017, and in 2023 it reached the global issuance surged to $10.8 billion. So we are seeing ESG responsible activity from the Islamic finance side as well, and the instruments that are tying in with this ideology also picking up momentum.
Also, if I can add, as Dr. Zishan earlier mentioned, that the guiding principle is coming from Sharia, and there are two sources of there are more than two, but I'll just focus on two: the Holy Book, and also the sayings of the Holy Prophet. And there are several sayings of the Holy Prophet which are actually the guiding principles which promote the concept of ESG. For example, if you are even on you are on a river, don't waste a drop of water there, and don't cut down the plants and the greenery in the environment. And so there are a lot of sayings which basically promote the concept of ESG, the full disclosure. That's very important. If you are dealing in a product and there's any defect in the product, you have to tell upfront to the potential buyer. So these are the concepts which are very, very close to the basic principles of Sharia. And from an Islamic institution perspective, these are also ensured. From a social perspective, also again, the concept of education for everyone, avoiding child labor, giving equal rights to women. And these are all the factors which are part of the Sharia governance and the Sharia regulations. And Islamic institutions not only have to conduct their business in terms of those Sharia guidelines, but also they have to follow these ESG considerations. As far as your concept about digital or AI is concerned, I don't think there's any conflict between Islamic finance and going digital or following the AI. They work side by side, and I don't see any conflict. So I would not say that the Islamic institutions or Islamic banks or capital market institutions are more closer to the going to the digital journey or the use of technology, but I don't see any conflict as such.
Just one thing that I like to mention is when you talk about blockchain, so one thing that is in spirit with the Islamic finance or the Islamic teachings is Islam encourages. I think the longest verse of the Holy Quran it talks about clarity in Mamlat or dealings. It also talks about writing down contracts. It also talks about having witnesses on the contract. And if you look at blockchain, it is basically in spirit the same thing. There are multiple people who are keeping that record, and everything is documented. So I think that's very close to what Islam teaches. So I think when we talk about blockchain and digital transformation and fintech, many of the things they represent Islamic spirit.
Wow, that's an interesting note, no? There's another question here. Maybe this is for Dr. Zishan as well, and this is specific to Pakistan. There seems to be a lot of focus on corporates by the Islamic banks in Pakistan. When will be the banks shifting focus to small and medium enterprises? Penetrating Islamic finance at this level might be instrumental in strengthening the base of Islamic financing, but might as well help them grow, thus leading to further economic growth. Is it that Islamic banks are risk averse?
Yeah, in an economy where the government is the biggest borrower to crazy extent, and then corporations, the easy way out is to just keep funding the government and the big corporations. So right now, this is one of the critique of local Islamic banking industry, that they are not reaching out to SMEs, the small medium enterprises. But I think there are other outfits which are developing, like microfinance and other Islamic institutions, which perhaps are catering to such institutions. But I would say that we are still a long way from mainstream Islamic banking catering to the needs of the common people, where they can access funds and they can include people from which are offering business on small scale. But then if you look at the other alternatives, Islamic finance, like private equity, venture capital, there are many possibilities where, if you have a good idea, you're young and dynamic, you can get your project funded.
All right. Thank you for that. Yes,
I
Mohammed.
would like to add it, as Dr. Zishan mentioned, is microfinance institutions are more likely to work closely with the for the SME sector and for the smaller institutions. And we have a great example of a Huat, which is a microfinance bank, and they are purely Islamic, and they provide financing to small and medium enterprises and small loans. They provide small loans without any cost of funding. They don't charge any interest on it, and they provide short-term to medium-term loans. And their actually recovery rate is 99. Default rate is less than 0.1%. So they are playing a very important role. As far as the commercial banks are concerned, because they have to be ready all the time to make the deposit available on tap, and the borrower and the depositor can take the money back at any point in time. They don't have the ability to kind of provide funding for the medium to long term, except on a very limited basis. And as Dr. Zishan mentioned already, that with government being such a large borrower in Pakistan, they can enjoy very good spreads by just lending to the government, which is risk-free lending. So they are not likely to focus on that. But the good thing is that some of these banks have already created microfinance banks, which are separate entities for the purpose.
All right.
Can I add just one thing
Sure.
on the Islamic microfinance side? There's this innovative product, Binyog Sati, which has been developed by ICD, that is the private sector development bank private sector development arm of Islamic Development Bank, which is a multilateral development institution. And in that product, they have linked zakah, which is Islamic tax, zakat, as is called in some jurisdictions, with Islamic banking. The product is being tested in currently in Sudan and Bangladesh. So that is, one interesting product that can be looked into from the Islamic microfinance point of view.
I see. Is there any taxation considerations that are unique to Islamic finance?
So we have a compulsory zakat that is 2.5% of the wealth that is every Muslim has to pay that. And the channelization of those funds can, as they are doing in Binyog Sati, can help the underprivileged and even the Islamic microfinance segment.
Okay. Maybe Dr. Zishan, another question for you. Is it allowed under the Islamic principles to give profit of under 10% to depositors but charge over 20% on loans lent with the depositor's money, whereas banks have the ability to give loans with a smaller spread to cover the cost of business and a reasonable profit to help the businesses and the economy, the environment, and other green projects.
So as I said earlier, that in Islamic teachings, there are certain things which are outright prohibited or outright obligatory. But in between, there are things that are highly recommended or morally binding, but not legally binding. So in cases, Islam encourages you that you should not exploit or benefit from somebody else's constraints or his the circumstances he's forced with. But then it doesn't say that it is illegal to charge a higher rate on the same deposit. So it's, from an obligation or a red line perspective, it is possible that you're giving a low return to depositors and you're lending that, not lending, but deploying that money to more profitable ventures where you're collecting the double the amount. So your spread is pretty fat. But again, this is something that the Sharia scholars who are sitting on the boards of Islamic finance, they keep on asking this question. They keep on acting as a conscience that what are we trying to do? So what is our larger impact on the economy? So is it fair? So in that case, we've seen that Islamic financial institutions, they have come up with their separate outfits where they, for example, they would have some kind of a organization or arrangement where they would be giving Qarz Hasna loans. For example, Mizan Bank has its Ihsan Trust, which is helping many students fund their education free of cost. Not free of cost, but it's a Qarz Hasna, but you do not charge anything, despite having a 30% inflation sometimes in Pakistan. You're not required to pay anything. You just have to return the original amount that you borrowed. So there's, in that form, in those forms, there are social contributions and CSR. But again, on the business side, when we look at it, there are situations where the spread is huge and Islamic banking industry is profiting. But again, this is something that we keep on talking about with the Sharia scholars community, that this, in order to represent the spirit of Islam, I think we need to do something different.
Yep. Okay. Just going back to Dr. Muhammad's comment on the experience in the UK, where Islamic finance, where the UK is now the global center of Islamic finance. So it really does require government support as well. So maybe we can learn from it, and maybe if you can share what other or if there are any incentives that the British government has provided to this particular sector for it to grow and become a global center for Islamic finance. Because we do have in the Philippines only one Islamic bank, and it's really struggling to take a foothold in the mainstream market.
I'm not sure about any fiscal incentives provided to the Islamic institution in UK, but I know for a fact that such support or concessions have been provided in Malaysia and in Pakistan. So, for example, for the corporates, for the companies or the issuers who complied 100% with the Sharia guidelines, they were offered a lower tax rate, a corporate income tax rate, compared to the other institutions. There was a differential of about 2% at one point in time. And similarly, for promotion of Islamic mutual funds and Islamic investment companies in Malaysia, they provided a 10-year tax holiday. So yes, given that if you want to promote a particular segment of the market, and especially these segments are very small initially, some kind of a tax break or incentive can be helpful. But I'm not 100% sure if UK has done something similar or not. But there are many examples of other markets which have done the same.
Thank you. Thank you for that. Just on other products, we've got a couple of products, as a couple of comments asking about the product. So one is, are inflation-linked securities allowed in Islamic finance, whether it be debt or equity. And then if there are also instances where insurance and guarantee in some financing activity are allowed as well, or were they required?
Okay, so in Islamic
Go ahead.
finance,
Go ahead,
Islamic
Sajid.
finance, yeah. Islamic finance in the rent-based mode, such as Ijara, Islamic bank allows you to charge a floating rate, which is benchmarked to a reference rate, such as LIBOR, or in case of Pakistan, it is KIBOR, which can be reset on a 6-monthly basis or an annual basis as deemed appropriate and as mutually agreed between the Islamic financial institution and the customer. So this allows the Islamic financial institution to provide for inflation and any other increase, because this mode of finance is basically linked to the usage of asset, and the customer is paying rent, and Sharia allows adjustments in rent on a fixed time interval. But those have to be pre-agreed, and they have to be subject to a floor and a ceiling. So the floor and the ceiling need to be defined at the very onset of the agreement as well.
Okay, Dr. Muhammad, you want to add something earlier?
No, Shazia has correctly mentioned
Okay.
that. I would just add about the insurance. I think your second question was about insurance.
Insurance and guarantee. Yes.
There is an Islamic equivalent of insurance, which is called takaful, and the structure of that is different from the conventional insurance. But again, one of the things that we have to understand is that there's no prohibition that an Islamic product, whether it's an investment product, it's a lending product, or an insurance product, if it mimics some of the features of the conventional or the traditional banking or investment or insurance. So the outcome of the Islamic takaful or insurance is similar to the conventional insurance. However, it is again on just like a mutual fund basis, on a pooling basis, that the risk sharing is done by the people who are part of that insurance pool. So the structure is different, but the outcome can be similar, that in case of loss due to any unforeseen event, the takaful company or the insurance company will pay for the loss. But obviously, when you are talking about large numbers, the probability certainly goes down as compared to everybody doing self-insurance. So yes, takaful is there. Takaful is catching up now in many markets, especially I would say Malaysia, Pakistan, Islamic countries. Also, Swiss Re is also doing Islamic takaful. So on a global basis, there are a lot of institutions which are doing Islamic takaful as compared to the conventional insurance.
All right. We were talking a lot about different products that Islamic finance or Islamic banks can offer, and also as a comparison with the products being offered by conventional banks. Maybe if you can highlight what are the solutions or products that Islamic banks can offer that would not be available through the conventional finance or conventional banks, in order to attract more individuals and businesses to adopt it, other than the obvious reason of the religious aspect of it.
I think so far the suite of products that the Islamic banks are offering are covering all the conventional alternatives that are available. Islamic microfinance is still at a very nascent stage, so that is yet to take off. But mostly, there is nothing different at the moment that is being offered by Islamic financial institutions when we do a product comparison.
All right. Okay.
So just thing I'd like to mention, it's like, if we look at all the equity, so Islamic finance is by large either equity or real asset backed or trade based. So if you look at some of the things that they offer, they're unique. So, one thing that I remember, one of the books that are written by, that I really like, Islamic Finance for a Conceptual Framework, is by two professors of Harvard University, Samuel Hayes and Frank Vogel. One of them was from Harvard Business School, the other one was from Harvard Law School. And he came, I was teaching at IBA Karachi at that time, and he came to deliver a conference there on Islamic Bank. And he said, at that time, Harvard's endowment was around close to $18 billion. And he made a point. I met him and I saw him and I asked him, and he told that our $19 billion endowment is 90% in Islamically compliant instruments. So he's like, somebody who's an authority in Islamic finance, and he knew it inside out. So I think all kind of equity instruments and the venture capital, private equity can be structured as Islamic. Similarly, the trade-based funding, like the Murabaha by Muajjal, they're also a little bit, they carry their own unique aspect, that they're kind of funding for raw material or other such inventory that a company is buying. So I think this is what we can expand it to other such instruments, but because I mentioned earlier in the beginning that because the customer preferences, the regulation, the competition, all of them shape the practice of Islamic finance. And somehow one of the things that I feel is that Islamic finance has not lived up to its full potentials because mostly the people are mimicking what is already there on the conventional side. We need more innovation, we need more innovative thinkers, more Sharia scholars who can think innovatively, and then we can have the full potential of Islamic finance.
And just adding to that, the risk appetite of the Islamic financial institutions also, that is quite limited. So which restricts them in terms of, broadening their product portfolio.
So is there any kind of push again from the regulators to be more innovative, or is this like a organic evolution?
From the regulatory side, the regulator in Pakistan, I know for sure, is pushing for the development, of the SME financing, and catering to those segments. But it's just because, as discussed earlier, that the easy way is to finance the government, and that's almost risk-free way of financing, and the government is a huge borrower of funds. So obviously, then the attention that is paid to other sectors, especially SMEs, is not as much as it should be.
Yeah, okay. Thank you for that. Maybe I can just take one more question about LIBOR. Because you've mentioned earlier that LIBOR is one of the benchmarks being used. So has Islamic finance been impacted by the recent moves to retire LIBOR in certain currencies and introduce alternative benchmarks?
I don't think so. There has been an effort to promote the Sharia compliant reference rate, which is called the Islamic Interbank Rate, IIBR, but that has not gained traction so far. But I think the change in the reference rate would not affect the operations of Islamic finance.
One thing that I like to mention is that if the economy is open and the funds can flow from Islamic to conventional and vice versa, it would be just an opportunity for arbitrage if you have two different rates within the same market. So there may be some compliant individuals who cannot mess up with, flowing the funds from one to the other sector. But if it is like open and funds can flow overnight, then it doesn't make sense that we can have two rates in the same economy at the same time. So yes, once the Islamic, for example, in case of Pakistan, is the Islamic banks become the majority banks, and the deposits and the funding assets that they have become the majority funding assets, the KIBOR would immediately or automatically become IBOR, which is Islamic Interbank Offer.
Okay, I think we've covered a lot. It's like information overload for us newbies into the Islamic finance. That after this event, what are the resources that you can recommend to us that we can access if we wish to learn more about Islamic finance? Maybe Dr. Zishan, if you can point us to any of these resources, webinars, books, or courses to take.
So yeah, so one thing that remember, just like in accounting profession, we cannot, only somebody who's just maybe doing financial accounting 101, he can learn accounting without referring to the standards. Similarly, in Islamic finance, there are standards which are the define the rules of the game. So I think the best and most authentic sources would be referring to the material that becomes available from IOFI, the Auditing and Accounting Organization of Islamic Financial Institutions, which issues accounting standards, but more importantly, Sharia standards. So I think that's the biggest source, and that's the most authoritative source of standards. But when you talk about the different textbooks, I think the numerous good books that have been written on the subject, they're available. Look at those, the ones that are bestsellers. Similarly, you can look at the Islamic Finance Program of Harvard. They have some repository of research and articles that they've been researching and developing for some years. And then there, obviously, you can look at some of the sites of these websites of these central banks, like the Central Bank of Pakistan, where the entire contracts of modes of fundings are available in Islamic fashion. So the rules and regulations are also available. So I think they can be. I think this is something that me and people like Razi and Shoaib need to do. That we need to put on more stuff on perhaps YouTube and other places where people can access it. Right now, I haven't found any satisfactory one single place where we can find very good YouTube lectures or other things.
Mm-hmm.
It's something we need to develop.
Just
All
to
right.
add to what Dr. Zishan has said, so CFA Society Pakistan, in collaboration with other societies, has compiled all the webinars, Islamic finance webinars that were conducted in the past in the form of a booklet, which is called Contemporary Islamic Finance Practices, and that is freely available.
Thank you. Thank you for those items. And our host, Monzen, actually posted some links that we can access to learn more about Islamic finance. Thank you, our esteemed panelists. This has been a very engaging and interesting panel this evening for us here in the Philippines. And thank you for those who posted their questions in the chats. A very engaging audience. Thank you so much. Let me give it back to our host, Monzen.
Yeah. Also, thank you to our moderator for guiding
you.
this truly enlightening discussion
Thank you.
on the basic principles. Yeah. I guess before we conclude today's session, we kindly ask our participants to direct your attention to the screen for the QR code to our online evaluation. Your feedback is invaluable to us, so please take a moment to fill out the survey. It will only take 1 to 2 minutes of your time. So while the participants are filling that out, I'd also like to thank our esteemed panelists who have guided us to this wonderful discussion. We've explored principles such as Sharia compliance, risk sharing, ethical investing, also understanding the broader implications for global finance and economies. We hope to see you again in a future session as well. And finally, for everyone who's here, we invite everyone to turn on your cameras for a special photo opportunity with our distinguished guest speakers and our moderator. So okay, if everyone can just turn on your cameras.
Yeah, give me 1 second.
Oh, please. And Precious, let us know if you're taking the picture.
Okay, 1, 2, 3. One more. One, two, three. Okay na po. Thank you.
All right. Thank you all for joining us today for this insightful webinar. Once again, CFA Society Philippines would like to extend our heartfelt gratitude to our sponsors. Platinum sponsor is Security Bank Corporation, and silver sponsors FTI Consulting Philippines Incorporated and BDO Unibank Incorporated. Our organizational partners are Bureau of the Treasury, Fund Managers Association of the Philippines, Securities and Exchange Commission, and Trust Officers Association of the Philippines. This marks the conclusion of our webinar. We sincerely appreciate your participation and engagement in today's discussion. Thank you for your time and effort. Thank you once again to our panelists and CFA Society Pakistan. Hopefully, we shall have more sessions ahead of this nature. Have a wonderful evening ahead.
Thank you. You too. Thank you.
Thank you.
Thank you. Thanks, everyone.
Thank you so much.